someday we'll know. Someday.
Good afternoon, family, and I hope all is well. As promised, we back at you with another video. Like I said last week, if you guys caught that, the next couple of weeks we'll start giving out free content on real estate investment and what that's about and how you can leverage that to build financial freedom for your family. Right now I'm at a property that we're about to close on next week and then get renovations going. But before that, I wanted to connect with you a minute. Prior to last year, I only thought that there was one way or two ways to be a part of real estate, right? That was either one, be a realtor to help people find properties and or list properties for people that's trying to sell, or two, be a landlord, right? But what I didn't know was about real estate investment. And so to be a real estate investor, you don't need a real estate license. Now, I would argue to say that if you have a real estate license, it will only aid your business, but it's not necessary when you're starting out to necessarily have that. But if you do end up getting that, it'll definitely put you and your company in a better position, or align yourself with realtors that you work with, which is what we do to help run comparables for you and things of that nature. But so real estate investment is finding a property, right? And then we focus on three different exit strategies. One is, are we going to buy that property and fix it up and keep it as a buy and hold, what's called a buy and hold, which is basically a rental property? Two, are we going to buy that property, renovate it, and put it up back on the market? Or three, are we going to get that property under contract and then sell our equitable interest to another investor? And that's what they call wholesaling. So for this particular property that we have under contract, and we'll walk through it today, it's a beautiful property here in Indianapolis, Indiana, in the Sobro area. It's a 3-bedroom, 1-bath, 1,580 square feet. When we're done, we're going to refinish the basement to add some more living space in there. Also add 2 more bathrooms and refinish the rest of the property. Make sure that it's beautiful, do some landscaping on it, and put it back on the market. So that's going to be the exit strategy for this particular property. But let's dive deeper into the different strategies. So one, if you're going to do a buy and hold, which is basically using a property for rental properties, which is a great way to accumulate assets and have passive income coming into your family on a monthly basis. What we do is we look for those opportunities either on the multiple listing services with realtors, or we leverage what's called generating leads from motivated sellers. So a motivated seller is someone that is looking to sell the property for whatever reason or motivation that gives them the opportunity to get rid of it, right? So it could be a tired landlord, someone that had a rental property for several years, and the tenants that they had been tearing the property up, running the property down. Maybe the property value is going down. Maybe they had some own hardships in their life and they just no longer want that property anymore. Well, we generate a system to get in contact with that motivated seller, right? We call them, we come out, we analyze the property with a repair estimator, and then based on that information, we give them a fair value for what the property is worth based on what it needs to bring it up to market value. You could do that with single family residential, which is one house that a person lives in. You could do that with multi-units like doubles, fourplexes, or commercial as you go bigger. All of those different strategies are different properties are a way that you can generate passive income on a monthly basis. So active income is basically going out using the same strategies to find the properties or different motivated sellers out there that no longer want the property. So if someone passed away, God forbid, and they inherited a house, and they may live out of state or in state, it doesn't really matter, but they're not in a financial situation to where they can renovate the property to bring it up to speed, so they can either get a renter in there or sell the property, because every month taxes are due again, right? So that property is costing them money and they're not receiving any money in return. So from that aspect, that person is basically, hey, I need to sell this house and get rid of it so I can get some money back in my pocket. Now, those type of properties that are in a rundown condition are hard to put on the market for sale, right? So basically a real estate agent gets that property. Their interest is to make a percentage on the properties that they're able to sell. So if they get a rundown property, those properties don't really sell as quick, right? And also it's not inhabitable. Some people can't get loans on those properties unless you do a 203K or something like that, but we'll talk about that on another episode. But so we connect with those people. We give them a great offer based on what it needs, based on what the market value is for it, and we put money in their pocket. Long story short. The third strategy is what you hear people talk about a lot when they say, oh, you don't need any money to get into real estate investment, zero money down, right? Make money in real estate without ever spending a dollar, which is necessarily not the truth from what I found. But basically what that is when you find a property, let's say that you've gotten into real estate investment and you have 2 or 3 flips going on, right? Properties that you're going to renovate and put back on the market, and you just don't have the capacity to take on another project, right? Well, what you do from that point is that you do the same due diligence that you would as if you were going to analyze the property for yourself. You go look at the property, you evaluate it, you make an offer, and you get it under contract, right? You sign a purchase and sales agreement, and we'll go over that in another video, but this is just kind of a 30,000 foot view of real estate investment. But you sign a purchase and sale agreement for that property, and at that point, you have equitable interest in that property, right? So at that point, when you start to look at what position your company is in currently, can you take on another project? If that is not the case, then you have every legal right to sell your position or your equitable interest to another investor. Does that make sense? So for instance, a property came up to us a couple days ago in the Mapleton Fall Creek area, and the gentleman was selling his equitable interest in the property. So I assume, I don't know this for a fact, but I assume he had the property under contract for, I don't know, maybe $120,000, and he was asking $140,000, right? So now he doesn't own the property, but he has the rights to buy that property. And then if I step in position to buy that property, then he would just get the middle money out of that, or whatever we negotiate on. So I mean, we end up putting in an offer for 130. So we'll see what happens with that. But if he does accept the offer, then he had that property under contract for $120,000, well, then he makes a $10,000 profit once I close on the property with the seller when we go to close it. And I'll break this down in more detail as we go forward. Again, I just kind of want to give you a high level overview of what real estate investment is and different exit strategies. But that is technically what you would call wholesaling a real estate property. It's legal. You don't have to have your real estate license to do it. You don't necessarily have to have any real capital to do it. Now, it is kind of frowned upon if you don't do it properly, right? So if your whole intent is not, and it's all about intent. If you have no intention on ever closing on a property, well, then you fall into kind of a gray area, right? Not to say that people don't do it, so don't take me wrong on that, but it is kind of a gray area. So if you tie up a property with a realtor or with the home seller and you can't close or move forward on that property, well, then you're just kind of doing more harm than good, right? So if you can't find another buyer on the other end, and then that that contract just kind of dissolves. But at the end of the day, it's a great way to generate active income. So basically, you getting the short money out of the real estate deal, as opposed to if you fixed and flipped it, you'll get the larger lump sum of money. So to kind of put that in a numbers perspective, again, if you get a property and you sign it under contract, and I'll just use round numbers just for this video's purposes, you sign it under contract with the seller for $100,000, right? And you look at your current position and you say, oh, okay, well, this is a good investment for another investor, but it's just not good for us at the moment. You send it out to other investors, right? And there's ways that you do that to make sure that you're not positioning yourself in the gray area. but you send it out to other investors and say, hey, I got this property over here. It's $100,000. It's worth $270,000 after it's renovated. It needs about $40,000 worth of renovations. I'm asking $110,000 for the property, right? So then that person comes and looks at the property and say, hey, 110, right? After I renovate it, then I still make a good return on my investment. And typically on average, most real estate investors are looking for a consistent 15% or better ROI, or return on investment, depending on the level of work that's needed for the property. Obviously, if it's something that needs to be fully gutted and renovated, then they're going to be looking for a higher return on investment, because it's going to take a lot more work to bring that property up to speed. But I digress. That's real estate investment in a nutshell. As we move forward, we'll start to dissect those different things more specifically and in detail. And I'll probably get in front of a whiteboard to kind of do some illustrations, but you get the gist of it. Hey family, check out part 2 of this video so you can see the inside of the property. Like and subscribe. Love and respect.